Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on today's show?
Well, Jim, today we're going to talk about the 2025 KRO Favorites Collection, the rationale behind it, and we're going to introduce the first 10, and next week we'll introduce the other 10. There are 20 of them in total.
What does your 2025 KRO Favorites Collection look like?
Well, after 3 dismal years for the annual KRO Favorites Collection, I decided to do something different for 2025. And the concept for the last few years has been that the favorites are juniors that graduate from my bottom fish collection. So these are ones where the missing pieces have finally fallen into place. They've lifted off the bottom. It's much easier to explain why these are stocks people should buy, and also add them during the year. So I kick off the year with a batch of them, add more later in the year, and then at the end of the year, reassess which ones do I continue, which ones are finished, and what other ones from the bottom fish collection that I've assembled deserve to be actually on that list. Well, this year, only one of my bottom fish collection companies, Sitka Gold, actually mustered a gain big enough to qualify it as a graduate. And so I said, well, this is a problem, especially since several of the favorites from 2024 actually flunked down to bottom fish status. So I said, okay, this is going to be a problem to come up with favorites. And we're also the capitulation selling we saw at the end of 2024, it truly was distressing to see. People are throwing in the towels. They're done with the junior resource sector. They're going to stay away until they see a distinct uptrend going and being a reason for them to come back. And so I said, well, as I discussed in the last episode of the year, I had a choice: either quit or stick it out for another year. And I have made the choice to stick it out for another year. But I'm changing the makeup because I see one of my important challenges is to educate new audiences. Forget about trying to get the old audiences back, the boomer generation, sort of my age, the people who started 30, 40 years ago and enjoyed some really good times. In fact, I was looking at my 1996 bottom fish collection when it was still a physical snail mail hard copy report. The 100 companies I had on that list, that was actually a spectacular list of companies that did extremely well in 1996, and then of course got clobbered with the Bre-X fiasco in 1997, and then had to endure the whole dot-com boom, during which the resource sector did very poorly. So I have decided to add 20 juniors that are bottom fish, fair, and good spec value rated. Some of them are super cheap, and the idea is to spread them across a variety of concepts and themes. And because I'm at the end of, after March 31st, the traditional KRO individual membership for $450 a calendar year, that ends. It shifts to a $200 a month or $2,000 a year, which is aimed really more at high net worth entities and corporations than your usual investor. But I'm also starting the Kaiser Watch Substack subscription service and free service. The Kaiser Watch general comments will be posted for free. The Kaiser Watch specific comments will be available for a $10 a month charge. Those will be the comments that are about a specific bottom fish that get or favorite that get into the nitty gritty about the company. That sort of detailed, granular knowledge that people need to be motivated to want to pay for. So it'll be a fraction of the audience that actually pays. But my goal is to develop and educate through the Kaiser Watch general portion brand new audiences, particularly amongst the younger generations. It's interesting to look at the index for my 2025 collection. It seemed to tank right after the November 6th election, and then, or not November election, and then it flatlined. It's like a flat line. They all kind of went into a type of equilibrium. And the whole market's kind of waiting. What's going to happen in 2025? Well, last week I explained what I think is going to happen. We're heading into a period of extreme uncertainty. The perverse part about the gold price is gold's in record territory, but the gold producers have not followed. The gold juniors have even worse. Nobody cares about them anymore. And the general perception is that this is like 2011 when the gold producers developed a downtrend while gold was still ramping towards $2,000. Didn't peak until late 2011, and then didn't collapse until 2013 when it went all the way back to 1100, vindicating the negativity in the gold producer market that was already evident in early 2011. And now the market seems to think this history is going to repeat itself. Gold is going to tank. The general equities are going to continue to ramp upwards. Bitcoin is going to also ramp upwards, and gold is going to fail, and that'll justify the lagging performance of the gold producers. So heading into 2025, that's what we're looking at. I think anything can happen this year. We do not know what exactly Trump's policies will be, how they will be handled, how the rest of the world will react to them. I think there's a distinct possibility that both Bitcoin and the general equity markets, especially the Magnificent Seven, come under extraordinary pressure. And this time around, it's not like the juniors and the gold producers would get crushed in the fallout. I think this would actually liberate them, because part of what would help tank the general equity markets is the realization that the global West and global East conflict is getting very serious, and that raw material supply is going to be a problem for global West nations, and the desire to inch away from the U.S. dollar, the primary trade currency, that will continue to grow, which should give gold oomph to blow through $3,000. I think with all the predictions are gold will be range bound between $2,500 and $3,000 for 2025, and the market's probably not really going to start properly pricing the gold producers and with follow through in the juniors until gold makes it through $3,000 and sets that as a new benchmark. Now, I know we said $2,000 is that new benchmark. Once the market is convinced gold's not going back below $2,000, we will have a bull market. Well, we don't. We still have a bear market, and gold's at $2,600 plus. It's as if the market says, no, we're still going to end up back below $2,000. So I'm looking forward to this year. This is going to be an education year. I see it as very similar to late 1995, which culminated in the bottom fish collection at the end that did extraordinarily well. During 1996, when the third world frontier plays all exploded on the upside. This time it's going to be different. It's not about third world frontier exploration. The makeup of my favorites and my bottom fish collection, I'm staying away from most of the third world frontiers. I think that they're too expensive, too risky. Too many global East actors are at work in them, and we need to focus more on relatively secure jurisdictions.
Why is Aclara Resources Inc. a 2025 favorite?
I've had Aclara Resources as a bottom fish for a while. It's still bottom fish spec value rated. This is a very interesting company which came on the scene about 4 years ago or so with a project in Chile, and it was an ionic clay type of the rare earth deposit. Ion absorption clay deposit is the proper technical term, and that project, it was near a area of a town, and that the people didn't like the idea of this mine in their backyard, and it kind of stalled. But several years ago, they got hold of a project in Brazil called Carina, and they've now done up to a PEA level of it. These are large tonnage, low-grade, weathered rock material, very similar to the ionic clay deposits in China that are primarily mined for the heavy rare earths. Now, the difference between the ones in Brazil and the ones in China is that the Chinese ones have gone an additional round of weathering, which has depleted some of the superabundant rare earths like cerium out of them, so you get very strange distribution bar charts for the 14 rare earth elements. The ones in Brazil look more like a traditional carbonatite light rare earth system. But the issue here is China right now shows as for last year or 2023 had represented 68% of global supply. Back in 2009, I correctly predicted rare earth mania 1.0. The Chinese ended up restricting rare earth supply to the West as part of a kerfuffle with Japan about the Senkaku Islands. And the rare earth prices literally went to the moon. Stocks like Avalon, Rare Element, Quest, Tasman all did extremely well. And Wall Street then launched Molycorp, which owned the Mountain Pass mine, and it also did extremely well. But that all came to an end after 2011. The rare earth prices crashed even lower than where they were before this all started. But during that same period, global production has tripled. And China still has 68% of it. 12% comes from Mountain Pass. However, all of that Mountain Pass production is shipped to China for processing. So technically, it's still all coming, 80% from China. And China has continued to overproduce. The prices are low again after having a run-up in the past few years. And Aclara's Carina project I've got ranked as bottom fish, spec value rated, because it's not going to be super profitable at the current prices. But what if the conflict between China and the United States escalates and China expands its ban on materials, export ban on materials like gallium, germanium, and antimony and graphite to include rare earths again? Then the global West has a problem. But in the past few years, and Aclara's Carina project isn't the only one. Verde Agritech has what it calls the Man of War deposit, for which it's just outlined about 1.4 billion tons that it's going to spin out as a separate company and IPO on the ASX. There's a number of these low-grade, weathered clay deposits in Brazil, and they're not very thick. They're going to be strip mined because they've already been weathered. They do not have the cracking problems that bedrock type deposits such as the Mountain Pass deposit in California has. So the potential to rapidly develop these deposits, it is there. And Brazil has demonstrated itself to be a jurisdiction where if there isn't like real bad devastation to the environment, it will give the green light. So Aclara it's backed by a member of the Hochschild family. They've just had another big financing happen. The project's well advanced. If suddenly the shoe drops and we have a rare earth mania 2.0 crisis and the prices go up, this is a project which the market would jump onto, crank up. And very importantly, Aclara has developed a joint venture with a Chilean conglomerate to develop magnet capacity. Now, magnet capacity is pretty much missing in the United States and most of the global West. It exists in Japan, but it's missing here. So it's not good enough to just produce your rare earths, because if China's the place where you make the magnets and China's restricting everything, that's going to be a problem. So Aclara, I put on the favorites because this is the best stock right now to talk about what happens to the rare earth sector if the China-America conflict really gets extreme.
Why did you continue Arizona Gold and Silver Inc. as a 2025 favorite?
Arizona Gold and Silver has the Philadelphia project in southwestern Arizona. It's in the Oatman district, about 5-10 kilometers to the south. There was the Moss mine. That was a bulk tonnage mine operated by Elevation Gold. Elevation Gold went bankrupt this year. They were mining 0.4 gram per ton material. That project has now been acquired by Mako Mining, which operates gold mines in Mexico. Didn't pay very much for it. So all of a sudden we have a publicly listed company that's a potential exit strategy for Arizona Gold. And it's been drilling on the Philadelphia vein that runs through the patented claims that were laid down at ages ago and for which there are no problems drilling them. You do not need to deal with the BLM to drill these claims. But this vein dips somewhat to the east, and that has limited how far they can go down dip. And while they were drilling several years ago, they noticed that in the hanging wall of this vein, there was decent grade disseminated mineralization, and they developed what they call the Red Hill hypothesis, which is that this rhyolite dome to the east is actually sitting on a low-grade disseminated gold mineralized system that could be open pit mined. And this thing has the footprint of potentially hosting 2 to 5 million ounces, whereas chasing the vein along strike and down dip, that's maybe a 500,000 to 1 million ounce outcome type story. But they couldn't really build that because to chase the vein deeper, they needed to step onto the BLM land. And this is where this huge frustration that has been plaguing the resource juniors that have a project in the United States really became apparent. It took them forever to get 2 drill pads permitted on the BLM ground. And when they finally got the permit in early July, it was so hot that they could not allow a drill company to start drilling. Because when you have 120-degree weather, that's really, really dangerous. And you have to take special measures to make sure these drillers stuck there manning the rig don't die from heat exhaustion. They didn't start drilling until early October, and they've got 2 rigs turning now. They've got 5 holes from one drill pad. They've shown pictures and done descriptions. Yes, they have intersected the vein. We're probably going to, in the next few weeks, get some decent high-grade intervals from the vein itself. But what we'll be watching for will be, what is the hanging wall grading? Is the gold mineralization, the grade, mineralization thick enough and high grade enough that the Red Hill hypothesis is confirmed? The high grade may make the stock go up more, but if we get the confirmation of the Red Hill hypothesis, this is a stock that could start taking off. It got financed in the summer. They had to do that, not the greatest prices in the world, but they brought on some heavy hitters who see the outcome. And because now there is Mako Mining with its ownership of the Moss Mine, which is going to need mill feed. If the worst case scenario is all they have is the high-grade vein material, well, there is an exit strategy for that. But I've continued Arizona Gold and Silver as a favorite because I think this year, finally, with this right to drill from the BLM land, the company has the potential to show scale of the Philadelphia project.
Why did you continue Canalaska Uranium Ltd as a 2025 favorite?
I didn't add Canalaska Uranium to the 2024 Favorites Collection until March of last year, and that was because they've been exploring in the West MacArthur trend. They had hit some high-grade uranium mineralization in the basement rock. They've been chasing where the corridor is. This is the unconformity, where there's a fault structure that runs through both the overlying sandstone and the underlying basement. And inside these fault zones, graphite has developed. And if there was a hydrothermal system present, this right there at the unconformity is where awful lot of high-grade uranium can pile up. And the analog everybody looks at in that vicinity is the MacArthur River deposit. It's absolutely world-class. And in February of last year, they finally intersected high-grade mineralization in what they call the Pike Zone, right where it's supposed to be. So I added it to the Favorites Collection around 69 cents or so. It had jumped up. It was sort of a 55 cent bottom fish before that. But the stock did not really deliver substantial breakout in 2024, because the trick is to understand the geometry. The Pike Zone is below 800 meters. That's deeper than the 600-meter West MacArthur. There's a bunch of natterers saying you'll never be able to mine it that deep, which is technically not true. But you need to do very careful directional drilling, and they had to spend the summer slowly teasing out the geometry. They seem to have it figured out. They're going to resume this year drilling early in the year, and there's a chance now that we will see much more rapid delineation of the Pike Zone. Because of the nature of the setting, MacArthur River itself, it's not just one lens, it's a multiple lens within that corridor. You need to find exactly where these pearls on a string develop. So I think, if they had a MacArthur River clone, the stock would end up being a $20 to $30 stock. And that's why this year they were able to do multiple rounds of major financings. They are in excellent shape. And I think 2025 is the year where they finally start to deliver results systematically, because they understand what's going on in the 3-dimension. And the wild card is that with their more step-out type drilling, they find another pearl that they can also start delineating, and bolster the argument that this is going to be a series of high-grade lenses very similar to MacArthur River itself.
Why did you continue Colonial Coal International Corp as a 2025 favorite?
Colonial Coal owns 2 metallurgical coal deposits in northeastern British Columbia called Huguenot and Flatbed. These have been taken to the PEA level, and they really are the only sort of independently or junior-owned deposits, that are coal deposits of this nature, which are not controlled by major mining companies. And earlier this year, Citibank was retained to assist with vetting potential buyers of Colonial Coal to get access to these 2 deposits and to develop them. And the contenders are going to be Asian steel makers, be they in India, South Korea, or Japan. And the stock was my best performer until about August, when the waters had been muddied by BHP taking a run at Anglo-American, which failed, and Anglo-American decided to sell its coal assets in Australia, northeastern British Columbia. So everybody took a kind of wait and see attitude. There was also a period Glencore was acquiring assets from Teck that it was getting rid of, and that needed approval from the Canadian government. It did get that. But after August, it's like the momentum stalled, and the stock ended up back down there at $1.80 or so, kind of where it started at the beginning of 2024. But the story is the same. These assets are there. Everything's now been figured out who ends up with the Anglo assets. And now anybody else who wants a metallurgical coal deposit that they can develop for their own security of supply, they will have to focus on Colonial Coal. So the idea is that they will get a buyout in the $5 to $10 a share range. But if it should happen, and with Citibank there in the background orchestrating this, it's possible that a competitive auction could emerge. This happened about 12 years ago, when coal stocks that had been sitting there suddenly ramped up, went up 4 or 5 times in price, and got bought out in these all-cash deals. This is the hope that this will happen, that it might even disappear at a price above $10 a share in 2025.
Why did you add Eagle Plains Resources Limited to the 2025 KRO favorites?
Eagle Plains Resources is one of 2 prospect generator juniors that I have added to the 2025 favorites collection. Now, a prospect generator farm out junior is the kind that doesn't do that much work drilling its own projects. It specializes in doing research of existing assessment work, checking the availability of the land. In the case of Eagle Plains, it specializes in Western Canada, and it is very adept at sniffing out these projects, waiting for them to come open and very quickly map staking them. And it has, for the last 25 years, it hasn't had a rollback. It has about $9-10 million working capital in the treasury. It's got a big portfolio of projects. It's done several spin-outs that have been acquired by other entities. So this is a serious survivor company headed by Tim Termunde with an excellent crew based in Cranbrook of southeastern British Columbia. But we are in a severe bear market that's marching into its 13th, 14th year since it started in 2011. Their traditional market has been other juniors hoping to get a ready-made project where all you need to do is add money and drills and hopefully get some results that allow a song and dance and promotion and hopefully maybe a buyout from somebody else. But these juniors are not getting any traction. Even the serious juniors are not getting traction. I mean, the reason my 2025 bottom fish collection is the best ever is because money has become so scarce. The bear market is so severe. But Eagle Plains, it's got these projects. It continues to generate them. It's bottom fish rated because there is this bear market and also because their focus is Western Canada. And Western Canada, it has a First Nations problem. When Trudeau signed on to UNDRIP, he gave the First Nations a green light to basically become an aristocracy that asserts dominion over the future of Canada's natural resources. Now, not all First Nations groups are that crazy that they feel that, well, we own everything and we get to call the shots. Some groups collaborate. They see the win-win situation of working with resource explorers and developers in their backyard, but a lot of them are not. They feel empowered by Trudeau's policies, and there's this thing called consultations, which they can engage in or not. And the junior is kind of just stuck waiting for drill permits. So one of the problems that Eagle Plains has had is in 2023, they had the Vulcan project. And because they have such a healthy treasury, they are willing to take a flagship project where they think there are low-hanging fruit targets and maybe spend $1 or $2 million to see if they have a home run on their hands. Vulcan, in this case, was a Sullivan 2 type candidate. They drilled it and realized that it's not really where we should be drilling. We should be drilling over there. And so they apply for the permits, but for whatever reason, that First Nations group in that area, it's decided, well, we're not so excited about this. So they still don't have a permit to resume drilling on that. Some of the farm outs that they have a similar problem where they can't seem to get the green light from the permitting bodies because First Nations haven't sat down and done the consultations that are required to get the green light from the government agencies. But I've got it there. We do get a bull market emerging. They have all these projects ready to go. They can also operate them from the juniors. So it's kind of a bet on the destiny of the overall resource junior sector.
Why is Endurance Gold Corp once again a favorite?
Endurance Gold Corp has been a favorite in the past based on its Reliance project in southwestern British Columbia. This is in the Braylorn district. It's an epizonal orogenic high-grade gold system. It's higher up in the system than the 4 million ounce Braylorn system, which is to a large degree mined out. And they acquired this project first in 2019, and they've now spent 5 years cautiously, generating the targets in the first year, then drilling them, tracing them, trying to understand the architecture of the mineralization within this Royal Treasure Shear territory. As they became more comfortable with what was going on, they expanded the property footprint to a much larger land position through various deals like the Olympic auction with another junior and various private prospectors. And this year they did something that's kind of unheard of for a junior. They accelerated all the share issuances and cash payments to lock up 100% title. So that if something fantastic does happen, you don't have suddenly somebody discovering, here's a loophole, you aren't actually in compliance, we're going to get some high-powered lawyers and then I'll claim you don't have title, blah, blah, blah type of thing. And And this allows them to treat the whole package as one. They've done target development in the northeastern part where there are trends that are completely covered with old with ash from the Meager Creek eruption 100,000 years ago or whatever it was, and it's forested. It's never been properly explored, certainly not drilled. So they'll be able to go in there and see if there are multiple such cores. But this year was to a large degree a breakthrough year, or 2024 was. 2023 was supposed to be the year that they really sort out the Eagle Zone, the Reliance Zone, but the forest fire closures pretty much snuffed out more than half of the season. So the company never really delivered anything that moved the needle that much. This year, with everybody in a miserable bear market funk, they have delivered results. They've filled a major gap between Reliance and the Eagle Zone, showing that, yes, it's mineralized here also, even though at surface it's rather sparse looking. They've tested it now deeper than ever before. They still have results pending. They have money. They now have 100% title. So I think this year, I've got them still bottom fish rated because the market doesn't believe this really is yet a discovery. It sort of keeps being funded by the largest shareholder, who's a billionaire. And the missing piece is for the market to say, oh, this is going to get really big. And I think in 2025, this will happen, and it will finally launch and become a confirmed discovery gold play in southwestern British Columbia.
Why is Faraday Copper Corp once again a favorite?
Faraday Copper has a group of copper deposits in Arizona that have to be pretty much underground mined. They did a PEA in 2023. The market did not like it. This company has been backed by a lot of heavy hitters. It is to a large degree a bet on higher copper prices. But last year and even the year before, copper kind of stalled. And so the stock has been in this sort of sideways track. It actually managed to finish 2024 up somewhat from where I had it as pegged as a bottom fish at the end of 2023, but not a sizable amount. So the missing piece with Faraday Copper is the belief that higher copper prices are actually going to become a reality. And the energy transition has been a big part of the reason to expect a higher copper prices. The energy, the IEA says, we're going to need 50% more copper supply than the macroeconomy would normally require by 2030 to meet net zero emission goals. Right now, of course, the energy transition is believed to be dead in the water with the Trump administration coming in and dismissing climate change as anything that needs to have anything done about it. But we do have the AI phenomenon. We have the need to build out the electrical grid. We have the undisputable reality of higher temperatures each year, increasing the air conditioning requirements of, much of places like America. So we're going to need much more copper wiring, whether or not it goes into electric vehicles or anything like that. And plus, copper is fairly widely diversified around in terms of sources around the world. A decent chunk comes from Congo. That's pretty much under Chinese control at this stage. Chile is a major supplier of copper, but its deposits have been dwindling. Yes, there have been some significant discoveries recently in the Vicuña district that will end up being developed. But the expectation is if the global East and global West conflict becomes an issue, the United States is going to become more aware of its raw material import vulnerability. And the United States has plenty of potential for copper. And exploration for copper in the United States, I think that is something that juniors will end up being mandated to do, being given capital to look deeper, to find underground mineable systems such as what Faraday Copper has. And Faraday Copper, of course, if we get a $4.50 or better copper price, that's when development of that project starts to look conceivable. And that's the bet that this will start to happen in 2025, and we'll see Faraday Copper finally develop an uptrend as a proxy for the copper price expectations.
Why is FPX Nickel Corp once again a favorite?
FPX Nickel Corp, I first started covering when it was called First Point Minerals in 2010. It was part of that when critical minerals began to be an important concept. And what was special about FPX Nickel was that they discovered a type of nickel mineral called awaroite, which is natural stainless steel. There's no sulfide, no pentlandite or wuzelnite, whatever it's called, associated with this. This is a type of nickel which is easily recoverable through grinding and magnetic separation, and finally flotation of the concentrate to get a ferro-nickel iron concentrate that could be fed directly into stainless steel mills. And it's relatively clean. The tailings themselves are carbon dioxide absorbing, and they attracted 3 strategic investors. One of them is a secret, has yet to reveal itself. But what likely intrigued at least one of them was the possibility that this ferro-nickel concentrate could be processed to make nickel sulfate for the battery market. And the Toyota solid-state lithium-ion battery that they're working on, it apparently still requires nickel in the cathode. So this type of clean nickel for the future EV sector as fueled by solid-state lithium-ion batteries, it's going to be important. The reason the stock is in the garbage can is that they raised all the money needed to do the feasibility study and permitting. They're now in that value trough where they're plodding through the boring engineering, environmental studies. But a couple of years ago, one of the First Nations groups out of about 5 in that area with whom the company had done these deals with, it decided that it was no longer supportive. It had logged off the mountain, collected all the timber fees that it could for that, and suddenly discovered that this desecrated mountain was sacred and stood up and made an awful lot of noise. And because of the UNDRIP juggernaut that Trudeau has unleashed, where First Nations have final say on everything, even though the other First Nations in the area are supportive of development in their backyard, the market has backed off and said, okay, when you're ready to be in production and the government says, fall in line, you're not going to block this, so we're going to stay away. The other issue that I've got it classified as a bottom fish is Indonesia, backed by Chinese capital, has become more than 50% of the world supplier of nickel, and it is dirty nickel. They strip mine these laterite deposits. They power the smelting of it with coal, so lots of CO2 emissions. And Trudeau, the genius, just did a free trade agreement which will allow Indonesia by 2026 to ship dirty nickel to Canada, and basically prevent the Canadian mines that are trying to achieve a low carbon footprint from really competing in price with cheap, dirty nickel from Indonesia. So this is a bit of a pall hanging over this world-class deposit, but a reason to bottom fish it or buy it as a favorite now is because they also have this 75% stake in a carbon sequestration business based on what they learned about the magnesium tailings. And not all the deposits that they looked at had meaningful nickel in it, but they did have the same sort of magnesium mineral that really sucks up the carbon dioxide and packs it away forever, not like pumping it into some cavern in the earth from which it might leak. This is permanent sequestration. So they have this business model, and yes, energy transition goals are out the window, but there's the midterm elections coming up in 2026. There may be a sea change again. It may turn out energy transition goals are back again. By then, the extremists in the environmental movement will have accepted that, we're not going to flush fossil fuels down the toilet? Absolutely. It's going to be a transition of those also. So we may have an entirely new attitude where everybody, including the fossil fuel companies, are looking hard at carbon sequestration strategies. So this is something that they could spin out, and it could provide a separate upside. But the main reason to have it on there is this is the stock I can use to talk about where nickel is going, and also talk about this carbon sequestration strategy that some of these minerals that aren't metallic can end up accomplishing.
Why did you add Nevada Organic Phosphate Inc. to the 2025 favorites?
Well, Nevada Organic Phosphate Inc., I talked about a number of times in Kaiser Watch during the past year. I like the story because their goal is to demonstrate that a scalable supply of organic phosphate is possible in America. Organic phosphate now comes primarily from manure and bone meal, which isn't very scalable nor overly transportable. But in the Murdoch Mountain project in northeastern Nevada, there are these beds, and they've been known about since the 60s, and they run from 3 to 15% P2O5. That's no good because the Idaho phosphate beds, they're thicker, and they run 25 to 35%, and that's the primary supply outside of the phosphate beds in Florida for America's phosphate supply. But the problem is these Idaho beds have a lot of heavy metals and radioactive metals like thorium and uranium in them, and these have to be stripped out. This is the so-called heavy metal index. The final product has to be below this threshold. So it gets processed chemically to make MAP or DAP, and this gets sold to the industrial corn and soybean big ag farms in America, where nobody cares whether it's organic or not, and a deposit like Murdoch Mountain cannot possibly compete against that. But Nevada Organic Phosphate came up with this idea. There is a potentially large market for organic food in the United States, in particular in California, which has 40 million people, the most of any state in the United States, and a GDP, the largest of any state in the United States, which ranks 5th on the scale of global nations. And California itself, its Central Valley, they don't grow corn or soybeans there. They grow nuts, fruits, and vegetables. And these are the sorts of things people care about being organic. And Murdoch Mountain's right next to Montello, by which the Union Pacific Railway passes. It loops down through Las Vegas to Southern California, and it loops north through Reno over the Sierra to end up in the Bay Area. So this stuff could be ground up, be a whole rock product. You would not process, you would just grind it, and you could ship it to these markets where there's a potentially big demand for organic fruits, vegetables, and nuts. The stock's 2.5 cents. They've spent $1 million getting a approval from the BLM to apply for a lease. Phosphate is not like metallic minerals. It's like coal and potash and natural gas. It has a completely different process. They finally got permission in September to do a drill program to test one of the beds, that outcrop. But then they ended up, the BLM ended up delay and deny. It took them 6-7 weeks to approve this, just in time for the sage grouse restricted period to kick in. Murdoch Mountain, the Leech Mountain Range, is within this giant 35 million acre footprint of so-called sage grouse habitat. There aren't very many, if any, sage grouse in this particular mountain range. There's so many in the range to the west that hunting is allowed, but because these are anti-development absolutists, they were able to delay it, so they now have to wait 6 months to before they can start drilling in May again when this restriction lifts. And they were even supposed to come up with the reclamation bond right away, but they finally relent and said, okay, this is unreasonable. And maybe they're looking at the incoming Trump administration who, if they can stop thinking about billion-dollar capex projects, start thinking about, we need exploration to generate deposits that deserve $1 billion capex investment to secure America's supply of raw materials. And let's loosen up the permitting deny and delay policy. Let's get rid of this. Let's let the exploration happen. Everybody knows how to reclaim their drill holes. They're not that destructive. Let's find stuff. And so Nevada Organic Phosphate is this little story. It's the cheapest one on there. It's stuck for another 4 months or so treading water. It will need to raise money, but it's kind of a ringer in the 2025 collection. Key thing is they need to confirm the thickness and grade variability of the beds, but also they need to confirm that the heavy metal index, it's about 1/10 of what it's supposed to, of the maximum, that what they sample on the outcrop also persists into the mountain where it becomes fresh bedrock. These are the milestones that we hope to know by summer, and this stock become a trading darling coming from its little 3-cent abyss where it now languishes as a bottom fish.
John, thanks for the update.
You're welcome, Jim, and next week we'll talk about the other 10 on its collection.
We've been speaking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.